Good morning, good afternoon, and good evening, and welcome to the TGI. Thank God it's Friday, the 18th of February webinar here, the Bull versus Bear webinar for TradeDay.com. Steve Miley on the call. So, welcome everyone. We're going to go through our kind of usual run through in here today, calendar, what we've had, what we've got coming up, more importantly, and then also taking a look at some articles from the major news wires. What are the major macro fundamental events shaping markets right now? Clearly, there's one major event, so we'll focus on that as we have been. And then we'll take a look at some of the charts and see what's going on. One thing, let's just do a heads up before we start. Reminder, and they got it on Forex Live in here reminding me. Reminder, it's a US holiday on Monday next week. Okay, so probably going to be markets maybe a little less liquid. Markets closed in the US. You've got partial days on the futures. We'll post something on the forums and also in the site chat later today regarding the opening hours. Please be aware of those opening hours, okay? And the other thing is, if you do trade, I would strongly suggest you don't be trading and have open positions on, guys, right? But if you do trade, remember there's going to be less liquid. There's going to be less liquidity, but markets could remain extremely volatile because of the main focus we have of the Russia-Ukraine tensions. Okay, so we've got effectively a long weekend in the US, 3 days off. That's going to probably influence trading today as well. Would you want to be going home long of any risky assets over the weekend, despite the kind of semi good news, the partial good news that we've had in here overnight, which I'll talk about in a second? Is anyone going to be happy going long on a weekend where obviously conflict could erupt? And also, not only that, but we've got a limited trading session on Monday. Yeah, so please be aware of that. It could influence today. It could give a more of a bearish theme to today, in that we could see long liquidation going into the day. So it's just something to keep in mind. The holiday, the President's Day holiday on Monday in the US. And I say we'll post some stuff in the web chat on the various parts of the site to remind you of that later today. Let's have a quick dip into the calendar. The calendar really is not impacting markets right here, right now, because we've got nothing significant. We have had some Fed speakers. Even the Fed speakers are not really influencing markets. We had the FOMC minutes earlier in the week. They had a slight impact in that the Fed basically, there wasn't anything in there we didn't know, but the Fed were not any more hawkish than the market expected, and so the market went into risk-on mode slightly after those Fed minutes. But it was only a slight risk-on mode, no real new news there. Data has been relatively light second half of the week. We've had some significant data out of the UK this morning, core retail sales. The actual main number, headline number, beat expectations. The core number slightly missed on the year-on-year, but beat on the month-on-month. So overall, a positive report on retail sales out of the UK. Going into today, we do have some Canadian retail sales data, but the rest of the Fed data in here today is fairly light. We do have various Fed speakers in there. You see Waller and also Williams speaking later today, and Brainard as well. So keeping an eye out for those as well, speaking through today. That's going to be the main focus on that side. Really, the big focus though is going to be in here. So actually, not that page there. I wanted to go this one. Is shares firmer, investor hopes for Ukraine talks. So yesterday markets were kind of went back to more nervous. We had kind of a more positive tone earlier on in this week, as it seemed that Russia were pulling troops back away from the Ukrainian border. At least that's what was reported. However, then we had kind of a denial of that through yesterday from the Allied forces, not necessarily the Allied forces. That doesn't sound right at all. From NATO, from various parts of NATO, particularly from the US, saying there's no signs of any troop withdrawal. In fact, anything, Biden saying he expects, some kind of conflict to come shortly. So that kind of set markets back into risk-off mode. Stock indices sold off. Gold surged to another new multi-month high. Although oil has started to dip back lower. Oil is putting a topping pattern. We'll come to that with oil shortly. But then overnight in here, if you're in the US and you haven't seen this, overnight we did get some positivity for talks, announcement on talks between Russia and the US. So US stock indices futures rose after news that US Secretary of State Antony Blinken agreed to as a meeting with the Russian Foreign Minister Sergei Lavrov. So that was deemed as a positive in here, and equity markets went higher on the back of that. So overall, a positive scene from that, but not anywhere near erasing the strong gains. The significant losses that were seen yesterday. But although technically the markets did, equity indices, US equity indices, did avoid more bearish signals, which we'll come to shortly. We held above the recent lows posted earlier in February, early this week, in fact. But nevertheless, so we avoided a break below those. But the rebound this morning hasn't been particularly aggressively strong. Excuse me. So that's been really the main overnight news. Nothing. That's the President says holiday. We go to 5 things to know. You need to know to start your day. So jaw is here. Jaw boning. So diplomatic efforts to diffuse tensions were so again in repeating what we've just spoke about in here. A lot of debate regarding how much we are looking at the first Fed rate hike expected in March. Is it going to be a 50 basis point, 0.5% right hike? Well, there was kind of a dip back looking for only a 50% chance, a 50-50 chance of it being either 50 or 25, having previously been priced in at a full 50. Now swaps markets are indicating a 50 basis points hike is still less likely. So there's been receding fears of a 50 basis point hike, with the markets now pricing in only a 25, more likely of a 25 basis point hike in here. Nothing really huge in here. So investors remaining on edge of developments from Ukraine. And we've also got options expiry today, okay, which may impact markets in here. Data side is fairly light. Okay, so nothing really more to add. So US futures advance on planned Ukraine talks. Okay, and then also gold price pushes above 1900. So that was more following through from yesterday. Gold surged higher, but has dipped back slightly lower on this overnight news. And oil prices below $90. So certainly a topping pattern. We'll go and take a look at that now. We'll go through the charts. I'm going to wind this up a little bit quickly in here, guys. We've got a big storm here in the UK. So if you are trading out of the UK, I'm not sure how bad the weather is in Europe, but we've got the worst winds and storm here in the UK with Storm Eunice since for about 30 years. We've got 90. I know in the US you have a lot worse weather than we do here in the UK, but we've had repeated power outages, or I have here where I am, and in the southeast, certainly we're seeing repeated, and I think all over the country. So just on a note to that, if you are in the UK or if you're in Europe and you're getting also bad weather, please do be careful with your trading in here today, right? So you could get knocked out if you're online, if you don't have, if you only have, landline access to broadband. Just be careful because if you need to have your stops in place, try to make sure you've got access via maybe your mobile phones to the trading platform so that you can access any open positions you have through there. Okay, so please just do be very conscious of that. Given the bad weather and the potential for power outages, for power cuts. Let's run through some of the charts. And there's that big sell-off. It was a really big sell-off yesterday. It started off fairly calmly, but then gathered pace throughout the session in here. A significant sell-off, almost as bad as we saw back here earlier in February. But importantly, the market held above this low in here, this swing low that we had from the beginning of this week, from Monday actually, when we had this hammer pattern, and we've held above that and we've tried to rebound. Now this isn't a great rebound, considering most of that sell-off yesterday was being driven by concerns about Ukraine, Russia. And considering we've had not a complete backing off of that, but we've also had, a redressing of that with the potential for diplomatic solution with talks between the US and Russia. Obviously, that could just be a smokescreen from the Russian side, that is. But then, the market hasn't really taken back. We're not even halfway back of just the sell-off. And we'll zoom in here and take a look at that. So if you look at this kind of quite aggressive sell-off in here on the 30-minute chart. So here's the sell-off for yes, I say it was fairly sell-off initially and then gradual sell-off throughout the session. So it wasn't particularly impulsive, just sold off. And then there's the overnight kind of news in here, and the market popped back higher on the announcement. And since then, it's actually drifted lower. And if you see in here from like the sell-off that we've seen, even if we just go from the more recent sell-off in here, but the sell-off from the more recent peak, I'm going to put on zoom in and put on two Fibonacci retracements on here. And I'm not going to do it on all the charts in here, but you can go away and do this. So here's from the sell-off for this week. Okay, actually, let's do it around the other way. Let me get rid of that. If we do the Fibonacci retracements from the activity so far this week, this sell-off for the week in here, you can see we didn't quite get even to the 38.2. We went through the 23.6. Didn't even failed almost exactly at the 38.2. Now, if we can get above the 38.2, that can open up potential upside. You can also see the 50% level is pretty much on. So yesterday we sort of sold off. We kind of had a bounce, and then it sold off through right into the close, right? So that bounce as well. So the 50% is near that bounce. So really, first thing it needs to do is get above the 38.2, which is pretty much bang on the high in here that we've got to overnight, which is 44.11.5. And if we can get above there, it'll quickly open up to this high here, and also the 50% level. So the high there is 44.24 and 3/4, and the 50% is around 44.20, just above 44.25. So 44.25 area, above here, above that peak, 44.11.5 quickly opens up 25, and then maybe up to the 61. And you can see that's the trigger point. The 61.8 up here is kind of the trigger point for where we had these lows in here, and the market accelerated when we broke those lows, and that's up closer to like the 44.40 area. So key levels 11.5, 25, and 44.44 on the top side. Now, if we can't hold, I would say even the overnight low. So let's just look at the Fibo on the breakdown. Actually, before I do that, let's just put so we can look, see if we've got any clusters of Fibonacci's in here. So I'm just going to do just the move that we saw. So there's yesterday's sell-off comes from here. So I'm going to do just from yesterday's sell-off in here. And you can see some of these kind of are lining up, getting closer to it, particularly this one here. So where we had that 50%, and we had the high there at 44, so that's 24.75. You've got the 50% and the 61.8% of just yesterday's sell-off. So that whole area there, that kind of 24 through 27 area is going to be quite important. If we can get above there, that can aim us all the way back here. But as I said earlier on, I'd be very, very careful, guys. And I don't feel like the market's going to want to go home anywhere near long, right? Unless we have a real positive statement coming out, probably from the Russian side, and some kind of, from the US side as well, kind of ratifying, diplomatic solution looks more likely. Unless we get something very positive, the threat is going to be back to the downside. Who's going to want to go home long? Obviously your longer term players are, but your swing traders, who's going to want to go home long, risking particularly over a 3-day weekend, okay, with less liquidity. And even though the futures markets are open here for the equity indices, cash markets, remember, closed. So so the market in here, not particularly great. And then I'm going to put one more Fibonacci and just look at what we've already given up, in fact, of the rebound. So if you look at the rebound from the low, in here, we've already dipped below the 50%. So the impulsive move that we saw overnight in here on the announcement of that potential diplomatic talks, okay, the market's already given half of that back at some point here today. We dipped below the 50% retracement. We're holding just about holding above it. We only just we actually went down to it here, held it exactly here, and then about an hour ago we dipped below it and bounced back above it. So if we can hold above, I would say here, and the overnight low, really, needs to hold the overnight low. If it can't hold the overnight low, 43.87 1/4, this starts to look really negative again, because it's then given back over half the rebound, and it'd be back pointing to the lows. If it's holding above here, we start to push back above the overnight peak. You can probably open up decent upside, but just be wary of what I said. About people. Maybe the last hour of trading could be quite negative, so watching out for that. Let's take a look at the Nasdaq. It's the same kind of story in here. Impulsive move, held above Monday's low in here, positive pattern in here, turning pattern in here, a candlestick, doji, long-legged doji yet on Monday. Market rebound, fouled, very impulsive, very negative, almost a worst session of February nearly. Here certainly matching these negative sessions in here that we saw last week. And then look, a lackluster rebound. And again, you can see in here that we're not even back to anywhere near the 50%, probably not even back to the 38.2% here on the retracement. Let's take a look at some other markets in here and take a look at oil. Which is now put in like a topping pattern. So let me just pop this a bit up bigger in here for you. So in here, you can see in here the market up, down, failing in here. I'm going to zoom in a second. You can see when we zoom in, you'll see a little double top pattern formed in here. And we're sitting just above these lows in here, these important lows in here. And I will zoom in and take a look at those. So let's go to the 30-minute chart in here. So you kind of got this double top pattern in here on oil. In here, so you can see the market went up, fouled down to here, rebounded to here, and it's almost a double top. You could almost have a triple top. 1, 2, 3. When it broke down through that low there. Okay, so that was an important low. So in here, this low here, market breaking below there. You can see acceleration lower, kind of just pits below, rebounds, and then fouls again and back lower. And now moving back towards that low. So I think that's important. Look at this kind of very tentative trend line. It's not the best trend line in the world, but this tentative trend line through here. We've broken this as well in here. We'll take that off. It's not the best trend line. And so the market overall, looking like topping pattern for oil. And looks certainly more negative. And these are going to be the important lows in here, all these lows over here now. So they're all sitting around the 88.50. The actual low there is 88.41. Now we are rebounding, but look at that breakdown point. You've got the other spike low here. You've got the other lows here. This is going to be an important resistance zone now. It's previous support now looking more like resistance. And that's going to be in like the 90.60 to 90.80 kind of area. If we can't get back above 90.60, 90.80, I would expect this to roll back low. So maybe looking to sell some strength in here. You could put a very tight stop above that peak there. That's at 91.53, selling in the 90.60, 80 level, looking for the market to break back lower, down to the low and beyond. We've also got this now downtrend line for them, the succession of lower lows and lower highs. So you've got this downtrend line through here, and I'll just expand that out in here. And so that's coming to come in, not exactly the same area, but not going to be far off as we go through the day in here. You're looking for that trend line to cap. You're looking for these previous supports now, resistance, say 90.65, 90.80 area, looking for the market to foul in there and probably maybe reinitiating a short from my side in here, I think. That looks good. Let's take a look at gold. So surging rally in here for gold yesterday. Again, the tensions, safe haven bid. We'd already just actually we hadn't quite taken out the high there. So wiping out that peak there, the peak here, and then the market fell just so that peak there that's a multi-month peak in here as well. So that high was up at 1882.5. We just fouled there early this week. Okay, and then the market's surging through there, and then we made another new high overnight, and then dipped and rebound. And if we step in now on the gold chart, I think that was your opportunity. That was, you really had maybe the opportunity to buy in here today, maybe even just pulling the trigger. Look, you can see this now. You got a little counter trend line. You got lower, lower, lower high, but you've got counter trend line off the top, off the very high, coming down through here. Now, if you can get back above that counter trend line, that's going to be on the current bar. It's going to be around 18.95. If you can get back above 18.95 in here, maybe a little bit above there, this looks like it could be pushing significantly high. Really strong rally in here yesterday to a new multi-month high for gold. So upside for gold again. I say we're probably waiting now for it to break this trend line. If you want to bait a bit longer, you've got this little overnight high in here. So that's 1897.9. So either through there, or if you want to go in a bit earlier, or maybe half the position through the trend line, half the position through that peak in here, looking for a retest of the higher, maybe higher for oil, for gold. And you can easily see gold as a safe haven being bought going into, again, a long weekend. Remember, these markets are at least partially closed on Monday. All right, I'm going to wrap it all there, guys. I see you've maybe lost the screen in here now, guys. Apologies for that. I'm not sure how long ago that happened. Yeah, apologies that we are having a few issues with the streaming service. I'll be back with you. Actually, we won't be having a webinar. There will be no webinar, sorry, on Monday. We'll put that into the forums. Well, no webinar on Monday, given the holiday. We'll be back with you with another webinar, the Bull vs. Bear webinar on Tuesday. Until then, have a great Friday. Have a great trading day. Thank God it's Friday. Have a good long weekend if you're in the US, and we'll be back with you on Tuesday with another Bull versus Bear webinar.